Steinhoff operationally had a superb first half of 2015. In Europe, their retail businesses grew their profits by 12% in euros, and that's in a declining market, and their businesses' margins expanded to 6.5%. Their UK operations grew profits by 20% in euros, albeit assisted somewhat by currency depreciation. And in South Africa, they also had a fairly good result out of their auto businesses and retail. And all in all, the group delivered about 16% growth in operating profit, which was a very credible performance. However, once we got down below the operating result, things got a bit more messy from there on. Investors will remember that they issued 350 million new shares last year, the middle of last year, which effectively results in their shares in issue rising by about 30% during this half-year period without the commensurate returns. So the 39% growth in profit before tax that you saw at the half-year was diluted down to 7% profit growth. At the same time, the Pepkor transaction, which has not yet been concluded, is likely to be significantly earnings dilutive in the next 12 to 18 months. We estimate at least 10% dilution to Steinhoff's group earnings. It's also worthwhile bearing in mind that when you look at the first half results from this year, there was a 4.5% tailwind from rand weakness versus the euro. And as we move into the second half of the year, that becomes a headwind of about 9% year on year. So that's likely to dilute growth into the year ahead. Taking all of these factors into account, we think that Steinhoff is likely to have a relatively flat 2015. Assessing the impact of Pepkor should also result in a flat 2016 result from an earnings point of view. Whilst it surely adds some strategic value, we think that the market may well be concerned about the lack of earnings momentum heading forward over the next 12 to 18 months. As a result, we think that the shares run pretty hard. It still represents acceptable value, but we think it might be the right time to take some profits, and we've lightened our holdings across our portfolios.